Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your business. He is the founder of the direct response marketing firm Market Domination LLC, and he is a 7-time best-selling author who has been interviewed on NBC, CBS, Forbes, Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity and real estate funds, discussing developments and trends shaping the industry. These experts will share with you how they've leveraged the power of equity funding to grow their businesses and increase profits, and how you can too. And now, here's your host, Cliff Locks.
Hello and welcome to another episode of the Private Equity Profits Podcast. With me today is Mark Willis. Mark is a certified financial planner, 2-time #1 best-selling author, and the owner of Lake Grove Financial Services, a financial firm in Chicago. He specializes in custom-tailored financial strategies that are unknown to the typical financial professionals. Mark is also the co-host of Not Your Average Financial Podcast, where he shares some of his secrets to the financial plan. Mark, thanks so much for being here today. I'm excited to have you on.
My pleasure. Thank you so much for having me on.
Tell me about your background and how you got started and what led you to the financial services.
Well, I certainly was not born into the CFP, that's for sure. Graduated from 3 private school degrees between my wife and I in the midst of 2008 with no real financial awareness of finance, but knowing that there was going to be a monthly payment due to this lady. I'd never met her, but her name was Sally Mae, and she apparently had a claim to a good chunk of our income every month. So we found our way toward an awareness of finance. We became more specifically interested in helping ourselves get kind of our financial ship. Mm-hmm. And along the way, it became a real desire and dream and passion of mine to see this also done for other people I worked with as well. At the time, I worked for a CPA in the midst of the 2008 and 9 and 10 fallout, and had the privilege, or I guess the unfortunate experience of hearing her make phone calls to clients in their 60s and saying to them, "I'm sorry, Mr. Client, I know you're 62 years old, but I just lost you, a third, a quarter, half of your life savings." That was a wake-up call for me. It was like a splash of cold water on my face as I was looking at becoming a financial professional. Should I, in the midst of that kind of experience, I never wanted to make that sort of a phone call. And that's sort of, I guess, it felt like being dropped into the front lines of a war, Cliff. So it was sort of that very rich soil that I was dropped into, fertilizer, you might say, but hopefully it helped me grow.
There's a lot of debt out there at this point. If you really look at the higher education, I'm hearing from colleagues they're $60,000 a year, on a tuition level, and the sustainability of what our youth is actually going into. Are they really leaving there with a degree where they're passionate about the subject matter, have learned how to listen, also be able to work with teams, play well in the sandbox with others, and then create a cooperative ecosystem where we're all in it together. Let's focus on the vision of success for that organization. But that debt it needs a plan. And I'm finding that to be a message with some of the folks that I'm, had the privilege of interviewing for this podcast. Many of them in the higher education have come out with substantial debt. And it's been a very large motivator for them to look for a financial path forward and build wonderful careers. Mm-hmm. And that little bit of pressure, maybe it wasn't so little, actually allowed them to flourish,
right?
Take a deep interest in the financial side and how to pay back those resources.
You bring up a great point, and I love the idea of the outcome of a college education being the skill set of playing well in the sandbox. I think that's a great sort of that's definitely not a college degree, sandbox playing, but that's really the purpose in many ways of what we're trying to learn as children and as we enter into adulthood is, do we play well enough with others so that they want to continue to play with us? I think that's what business is. That's
Yes.
what marriage is. That's what, raising our own children is. That's what, again, the entire concept of doing well in your adult life, generally having a good time being alive, is how well do you play with others? And are they wanting to continue to play with you, or do you, wreck all their toys and, generally not have a pleasant time playing with you? But you bring up another point too about debt. Recently there was a kind of a news report that was revealed by ProPublica. Apparently there was a data leak from the U.S. Treasury Department. And you may have heard about this, that the tax returns of the nation's wealthiest, looking over a 15-year period, they looked at 25 of the wealthiest Americans in the country: Warren Buffett, Bill Gates, Rupert Murdoch, Mark Zuckerberg. For example, Jeff Bezos in 2007, he was already a multi-billionaire, and now the world's richest man, didn't pay a federal tax dollar in taxes. And he did again in 2011. In 2018, Elon Musk didn't pay a single dollar in taxes. And Carl Icahn does it multiple times. How do they do that? Well, they look at debt very differently than, say, your typical college grad or someone with credit cards or car loans and mortgage. I mean, the average American, this is a statistic by the U.S. Commerce Bureau, the average American spends 36% of their income to service debt. Can you imagine? So Cliff, if time is money, what is a 36% of our day? But the very wealthy understand that debt is a tool that can help them minimize or even eliminate their income tax. I think Carl Icahn said, it doesn't matter if you're the poorest of the poor or Apple Inc. If you have no income, you pay no tax.
Very good.
And so that tool of debt it was a problem for me as a young adult, but sort of like jujitsu, you can take a problem and turn it into the solution. And that's really what became my passion. It's what gets me out of bed every morning now, to think like a banker and to become my own source of financing so that I never have to be in debt again, except to the power of financing all of my operations myself. And that kicks bankers to the curb. It gives us more control, and it increases our investment yield along the way. So that's been sort of one of the key pieces to our strategies at Lake Growth Financial Services, and what a lot of our clients come looking for when they reach out to us.
Thank you for sharing that. You state your strengths as being able to develop a custom-tailored strategies that are unknown to most financial professionals. What do you know that others in the industry do not?
Well, it certainly is no secret knowledge. I think I'd say the four most dangerous words in one's financial vocabulary are the words "do it for me." If we say that to somebody else, we are looking for trouble, financially speaking. We have to understand where our money is going and what it's doing. That doesn't mean we all need to get certified financial planner designations. Thank goodness. We don't all need to get a securities license, but we need to know what we want our money doing for us, because where you put your money makes it act differently. A hedge fund is different than a savings account in a lot of ways. Crypto is different than real estate in a lot of ways, but many people are putting their money in places without understanding what it's doing or what they're wanting it to do for them. So a key question I ask that I don't hear a lot of other financial advisors asking is, when you're the boss of your money, what happens next? And I ask them because the environment in which your money lives will either make it thrive or die. You put a fish in the wrong environment, it's not going to live very long. But if you put it in a nice temperature controlled aquarium, it's going to thrive. It's going to reproduce. You're going to have a lot of little baby fishies floating around. So we want to have an environment in which you can cultivate more wealth. And wealth is a holistic word there, not just net worth number, but the full entirety of that meaning, wealth. And the key piece to that is, who is the one controlling the environment in which you live? Who's turning the temperature up in that aquarium on your money? Who's turning it down? Who's adding too much salt? Is it you? Is it a banker? Is it the government? These are key questions. And by asking these questions with our clients over Zoom or over the phone, we're able to really distill down What is it that they want their money doing for them?
So their vision to success is key, and then you work it backwards.
There you go.
Very well said. One of your best-selling books is titled How to Be an Amazon Legend and Fire Your Banker. You're bullish on self-banking. Can you explain what self-banking is and why, in your eyes, it's better than traditional banking?
Well, yeah, there's a book written by David Graeber. The book's title is Debt: The First 5,000 Years. Cliff, can you imagine? 5,000 years. Banks have existed from pre-written times. And it's a great book, but the title says it all. Banks are a permanent fixture in human civilization. Mm-hmm. But I'd actually like to say that their function is really what's existed for 5,000 years. Not the noun, but the verb. The noun is what we see on the street corner or down at the main street in our cities. It's the biggest building in town, usually the bank is. And there's a reason for that. But banking is something that has interchanged between humans since caveman time. And I'd suggest that banking is the most profitable business on the planet, and rightfully so. It's the basis of trust between humans. It's the considerable back and forth bartering and debt that we carry with each other. But the problem that I see with most of our clients when they first meet with us is that the wrong person is sitting behind the banker's desk. Yeah. If they are coming in as a borrower with, kind of clenched hands together begging, it's going to be Mark Twain's quote all over again. A banker is a fellow who will lend you his umbrella when the sun is shining, but wants it back as soon as it starts to rain. Now, isn't that the truth with how banks treat us? I would suggest that more important than your rate of return on your mutual funds last year is who is in control of the banking function in your life. If we can control, if you, the listener, and you and I, Cliff, if we can each control the banking function in our life, then we win by default. It's like the small hinge that swings the big door in our financial life. Everything else to me is a secondary question. What's the return on your real estate? Well, what's the tax strategy that you want to employ? It comes down to who is the one controlling, again, the aquarium, And if you are the banker for yourself, then you get to decide how and when you finance major capital expenses, whether it's for your business or personal life. Mm-hmm. It determines, how you send your own kids to college, or maybe you have a business you'd like to buy and sell, or real estate you'd like to buy and sell, or whatnot. But if you can, essentially bring back the banking function in your life, then everything else becomes secondary. And there's some specific tools and strategies, financial vehicles that we employ and categorize to help people do just that without necessarily having to open up an FDIC insured bank.
Mark, what does your ideal investment portfolio look like?
Well, ideal is a good question because certainly every person's different. So we'd have to look at each person's scenario. Back to our previous conversation, Cliff. But this was a question I asked myself. I was sitting there with my wife. We were looking at our debts. We were looking at our goals and dreams, and beyond the debt, what else we wanted out of life and the legacy we wanted to create. And so we sort of asked the silly question, if we were Pope of money, if we could wave a magic wand and create a brand new ideal financial portfolio, what would it look like? I came up with a few characteristics, and, to be honest, they were not dissimilar from what I've eventually now heard many clients share as well. I wanted it to be tax-free. If I could find a way to have no taxes paid out. We've talked about how banks take a third of the average American's money. Throw Uncle Sam in there, and that's, maybe that's half your money gone just to taxes and interest. So I wanted it to be tax-free. I wanted there to be a competitive return that beat inflation and that I would have access to that cash. The problem I saw with most 401ks was I couldn't get access to that money for 40 years, right? So I wanted access to the money while getting competitive growth. I wanted it to be private because I knew getting into real estate and crypto and other alternative investments, that there would be exposure to risk for creditors or predators to come after me through lawsuits, God forbid. So I wanted it to be private. And I wanted it to be, essentially low fees and low cost. I didn't want 10 to 30 attorneys telling me, how much my bill was going to be to have this financial plan, or an investment advisor retiring before I could, because he was charging me so much in fees. So I wanted kind of a pretty exhaustive list, and I made a list. Actually, the list is over 25 characteristics long. Funny enough, as I was going through my certified financial planner designation, dividend paying whole life insurance, of all things, Cliff, popped up as a key tool. For me, it was a 200-year-old financial asset. It grew guaranteed and beat inflation if it was designed correctly. And that's a key distinction that most people have not seen. Most of the time when I saw whole life insurance, it was built for commissions and a big death benefit. If we flip that around, you can have a much more efficient cash value, building you massive cash accumulation right away. And that cash value on the whole life policy is accessible money, meaning I don't have to wait until some magical age to get the money out.
Money, right?
Yeah. And then lastly, this was the real kicker for me. When I used the cash value, I could actually use it as collateral for any loan I want. When I borrow against the life insurance cash value, the life insurance cash value continues to grow as if I hadn't touched the money. So to me, that's the ideal portfolio, because now, let's say I've got $100,000 of cash value in a life insurance policy designed this way, and I borrow out $80,000 to go invest, whether it's crypto or real estate or anything else. That policy will continue to pay me a nice, boring middle single-digit return, 4, 5, 6% tax-free. Meanwhile, I'm able to go get whatever I can get with my real estate or other investments, even paying off debt, which is what we ended up doing with our policies. First, we borrowed from our policy to wipe out our student loan debt. So that was, for me, an ideal portfolio.
Mark, you talk a lot about reducing risk while reaching one's financial goals. What are the surest ways to do so?
Looking to, again, kind of human nature, the only thing that we can really say is that Wall Street has no guarantees, and real estate and most assets don't have a guarantee. What I look for to reduce unnecessary risk, I love risk. I mean, I'm a business owner, real estate investor, and more, but unnecessary risk, let's eliminate that as much as we can so that we can seek out the necessary risk. Contracts, funny enough, again, going back about as far as banks do, human contracts with each other are key to building real wealth. I was talking to a client on Zoom. We were having a financial analysis meeting, and we were going through his portfolio, and his entire net worth was in these 10 real estate properties. And he had no mortgage on the properties. It was all paid off, 10 properties. He was going to make about $200,000 a year for himself, net property taxes and other expenses. So for him, that was very good. He was happy with that. We were just sort of talking, and I asked him, well, what is it about those properties that you like? And he said, well, I like that it's real. It's real estate. I can feel it. I can put my hand on that wall. Like, ensures that you own that property. And he thought about it, and he said, well, he said, I guess a deed, right? A house, the paperwork that says that I own that house. And I said, you're right. Without a contract, all we have in our real estate portfolio is squatter's rights. Without a contract, all we have is squatter's rights. Whoever has the bigger shotgun is going to own that property. My thought is contract law is the basis for real wealth in human civilization. And that's true with real estate. It's certainly true with cryptocurrencies, the contract blockchain, or with whole life insurance. Life insurance is a contract. If I look at most other assets, stocks, bonds, mutual funds, most of those are built on a paper wealth system that go up or down. And there's nothing wrong with those assets, and I have those as well. But the key is, where is your real wealth residing? And so back to risk, I think if we could couple, it's back to the old efficient market frontier. If I could couple a contract wealth asset like life insurance or something with a risk asset, whatever that might be, then we can really do some fun things together. You can blend those two together. We talk about that in terms of a barbell. On one side of the barbell, we have our risk-free asset that is guaranteed to grow for us no matter what happens in the market. There's nothing we can do to stop the contractual growth of whole life insurance or whatever else it might be. And then over here, we have a speculative asset. Well, actually, if you put those two together, you're able to take more risk, not less. So sorry for rambling there a bit, Cliff, but that kind of gives you a pic how we understand it. Yeah.
Right. A lot of the work you do concerns reducing taxes. What are some of the basic strategies that you employ?
It's making me think about that ProPublica data dump that came out earlier this year.
Mhm.
They use a phrase that in the article, and this was in USA Today and ProPublica and a number of other places, they use the phrase buy, borrow, die.
Buy, borrow, die. Thank you.
Yeah. BUY, BORROW, and then DIE. And I'll explain it quickly because I think it could change the life of, it's changed my life. It's changed the lives of many of our clients. Buy, you want to buy assets, specifically assets that don't generate an income. Why is it that Warren Buffett's company, Berkshire Hathaway, has paid no dividends since the late 60s? They certainly have been profitable.
Yes.
The reason is he wants assets like his stock that don't generate an income. Income creates tax, right? So buy an asset that doesn't generate an income. The second, among the very wealthy, is to borrow against those assets. You borrow, and Mark Zuckerberg has done this numerous times. Carl Icahn, Elon Musk has over 500 million in borrowed assets against his Tesla stock. You borrow against that to live on. And when you borrow against it, you pay no tax. Debt is not considered income by the IRS. And then when you pass away, DIE, that's not exactly the most thrilling part of this plan. But when we pass away, there's a step up in basis and you walk away with your kids or whoever walk away without having to pay a tax there as well. So again, I'm not in that list of the top 25 most wealthy Americans yet. I'll throw that word in there. But my feeling is most people listening aren't either. They might be doing really well for themselves, but I would suggest you can do buy, borrow, die without having to be the founder of Facebook. I'll use that same concept of life insurance. I can buy a life insurance policy. It'll grow guaranteed, but won't give me any income unless I want it. I can borrow against that for my income. I have a couple of policies, for example, that will pay me 6 figures a year with no taxes due. Okay. And I'll be able to live on that with no taxes due. And then when I pass away, the death benefit, right, when I leave it to my family, will also be income tax free as well. To me, that's a pretty straight down the middle of the fairway strategy for avoiding a lifetime and even multiple lifetimes of tax.
You illustrated that very, very nicely. Thank you for that. Our listeners are going to enjoy that. The bulk of my expertise lies in private equity and real estate funds. Do you see any general trends shaping these areas of finance or any new developments with them going forward?
I think one of the most exciting frontiers of finance is private equity. I think you can have so much fun and custom tailor very unique financial strategies that go beyond what I like to call amateur retail investment products. Your stocks, your bonds, your mutual funds, the things that we might find in somebody's 401k, target date funds, other things that are really the bottom of the barrel when it comes to the options that folks have. And thankfully, in your space, Cliff, you help and serve your clients to give them really the very top, the very best opportunities. It still comes down to trust and what do you see as the right fit for your clients. But I would suggest that, again, finding a pairing, like wine and cheese, or we could also say like nitro and glycerin. You want to find things that go better together. Assets that couple nicely together. And for me, in my own, nothing seems to really fit better than having an asset that will compound for me every single year, guaranteed, even if I tap that money and go put it over here for other opportunities. So case in point, I did a real estate syndication earlier this year and borrowed from one of my life insurance policies. That policy continues to give me a compound growth. And I'm also getting the yield and the appreciation and the income off the real estate and the tax advantages off the real estate. And I've got the appreciation on my whole life policy. So it's an incredible like wine and cheese combo there. They're better together than they would be apart. And again, the creativity of private equity is what inspires me. And I'm excited to see how we can, and this goes to another question we can get into some, but the key for me is not just preparing creative, fun financial strategies that wake up the CFP, the nerd in my heart, but not just preparing the money for the people that you want to leave it to. We don't want to just prepare the money for the people. We also, and you do such a great job of this, Cliff, you want to prepare the people for the money. Right. What is their mindset? You've talked before we hit record about how most fortunes are lost after just 2 and on to 3 generations. I think that's a shame, and what a great way to be able to train people to understand and to prepare them for the wealth that they might receive someday.
I think that's extremely important. And the assets under management from our professionals that will change hands frequently when that individual passes on, or that family, that the next generation, if they don't build a very, very strong rapport with the children, at some point, that is going to be a lost opportunity for the continuity of those assets under management. I think our financial planners, professionals, the accountants, the lawyers have a fiduciary responsibility to interact with the children within that wealthy family.
I agree.
Bring those skills up. And then the other side of it is defining what a good citizen looks like. In other words, in our youth, to be happy, to thrive, to be a mom or a dad, the philosophy of the individual to give back, or within the community at this being, to be an outstanding, positive citizen. But they own that responsibility. It's not mom, it's not dad, it's the kids. They own that responsibility. And how do you take that concept, how the family earned its money, and be able to share the story with the children, the next generations, so that richness stays and it gets to be shared over decades. And I think that's the real positive, go forward story.
Totally agree. Well, I'll share just a very quick story. We have a client who, a very unique last name. I won't share it for their privacy, but their name is their family name. Mm-hmm. And so what they decided to do, and this is just casual, they created an acronym out of their last name. So every letter of their last name represents a family value. And they get together for multiple times a year, ski resorts and so forth, and Thanksgiving and that sort of thing. And they'll share one of those family values that they all represent and try to live up to together, and this is what it means to be a family member of, blank family. And alongside that, they bring up their dividend statements, they bring up their net worth as a family, and they go over that with their financial professionals. But I just think that's a great reminder that we're not just preparing a bunch of money to dump in somebody's lap. We're creating energy that we can flow to the next generation.
It's an education. They're not going to get it inside our middle schools, high schools, or universities.
That's for sure.
Very few of us will leave the university, let's suggest, with a financial degree. So it has to come from within those conversations. And the professionals are sitting there. You're paying those professionals to guide you and your family. Use the resource, Mm-hmm. You started your own business like myself. We're both self-made, successful entrepreneurs. Tell us about your journey.
Well, as a reminder, it didn't start with much. I remember a young 5-year-old me, somehow I'd collected about $50 in a paper bag through allowance and other projects. And my mom took me to the bank to open up a checking account to teach me about banking. And again, you already know my perspective on banking at this point. So as a young 5-year-old, of course, I wanted to do what mom was teaching me. But when I went to grab my paper bag, I'm in the banker's office. I'm in his at the teller's office, whatever. And now it's time for me to hand this life savings, every last dime that I'd ever collected, all the hard sweat, blood, and tears that came with it, hand it to a stranger, and they hand me a receipt saying, "Thank you for your service." I didn't exactly trust that little banker. I thought maybe my money was safer in my paper bag. Now that I've learned about fractional reserve banking and more, I guess I was more right than I probably realized at the time. But point is, my journey with money has always been one of how can I make sure that as much as is in my capacity, there's many things outside of our control, but how can I control the things that are in my control, or at least influence them? I've come to the belief now, after a couple of curveballs thrown in my own life, that you cannot control as much as you think you can, but you can influence more than you think you can. And that's been my experience with money thus far. And starting a business has been the greatest adventure of my wife and I. We thankfully we're in business together. It's been quite an adventure to do that. Our staff and our employees, it's such a privilege to be able to help support their life and insights and strategies to over 1,000 clients around the country. But it's still a reminder, a constant reminder that we want to try to influence as best we can in the way that we hope the world could be. And I guess ultimately leave the world a little bit better than we found it.
It's wonderful. Mark, what is the culture and overarching philosophy of your firm? And you touched it there a little bit. Tell me more.
Well, yeah, we keep it. There's a long list of virtues and principles we try to live by. I won't bore you with all those today, but the key is helping our clients reach their financial milestones without taking unnecessary risks and becoming their own source of financing. To us, I believe that is the picture of sanity in a world gone mad. We've really found that a lot of our clients come to us because they're seeking simplicity, clarity, certainty, control, and they're sick and tired of being sick and tired, whatever that might mean. I just got off the phone with a really wonderful internal medicine doctor who had told me that she felt like all of the and she's wonderfully she's been in the business for many years in her work serving her patients, but she said that she's had 4 financial advisors retire before she could. What does that tell us? All right. So for me, I want to help our clients reach those milestones without taking unnecessary risks and building a sense of abundance in all areas of their life, as well as those of our staff and myself as well. What does abundance look like in your financial life, your social, your spiritual life, your family life? I don't want just to scrape by, and I don't want that for our clients. I want true sanity in a world gone insane.
Elaborate a little bit more. What makes you different from the rest of the financial professionals?
I guess ask my clients that for specifically. Some people call me not your average financial planner. And, we have a podcast over 200 episodes. The show is called Not Your Average Financial Podcast. Okay. But our unique perspective, I don't hear many CFPs touting the benefits and what whole life insurance can help you accomplish. Now, that's not all I do, but that is a key specialty that brings, I think, some counterintuitive approaches to using whole life insurance like a bank is sort of counterintuitive. We're among only 200 financial advisory firms in the country that have become bank on yourself professionals. Okay. And that's a credential that took me and our advisors in our firm, took me about 3.5 years to get that credential because there's a number of other kind of knockoff phrases out there looking at this strategy in similar ways. But what makes us different is we've gone through those rigorous training requirements to meet that credential, along with being certified financial planner fiduciaries as well. And because of that specialty and that focus on banking and the belief that banking is really the smallest hinge, it's the reason why banks are, the largest building in your town and really the largest corporations in the world. It's just my key belief that if we have the keys to your bank, if you have the keys to your own bank, then everything else becomes easier and more sane. It's a great, interesting book out there called The Creature from Jekyll Island. I won't bore your listeners about that, but it's a great book on the history of what was created when they created the Federal Reserve and the 2 national banks before that in this country. But what is it? Are we better off now that we have a central bank changing and manipulating interest rates? Some people say yes, some people say no. But the point is, if I can opt out of that system without having to leave the country, I don't have to necessarily vote a different way or whatever. I can one by one, as an individual or as a family, or in our case, with our clients all across the country, we can bring banking back down to the you and me level where we can once again say, all right, I choose to, borrow some money for a business investment or buy a car. And I don't necessarily have to participate in the banking system the way it's been presented to us. It's that paper bag all over again.
Thank you for sharing that. What would be your personal legacy? What do you love most about what you do?
My wife asked me one time, I think she was maybe planning my demise. I don't know. She said, Mark, what do you want on your gravestone? What do you want on your grave? At first I said, well, I thought about that Tombstone pizza commercial. I said pepperoni, but I think what I'd like to have is relish the gift and share the gift. That would be a really cool thing to put. I had another friend tell me he wanted to write the words, he was getting better at this. I think that'd be a cool thing to put on a gravestone. He was getting better at this because we're always improving. Hopefully we're always growing and improving. And that gives me some hope. We'll continue to grow, see a better future and leave a better legacy.
Well, with 1,000 clients, you're doing exactly that. So you have a lot to be proud of.
Well, thank you. It's a privilege. It's something we have to earn every day, as you know very well.
Mark, do you see yourself exploring any new frontiers in the future? Are there any arenas professionally that you would like to see yourself getting into?
Sure. Yeah. Professionally, there's the sky is the limit. I wrote that book, Amazon, How to Be an Amazon Legend and Fire Your Banker, as a co-authoring experience with a gentleman who had really led the way in e-commerce for a lot of business owners who have really built up an e-commerce platform. That was a lot of fun. So co-authoring other books with folks has been a lot of fun. I wrote another book that hit some bestseller lists. Yeah. It was called Real Estate Investing for Women. Excellent. I don't know how I got on that list, but I was graciously invited by Monica Sawyer. She's a very popular nationally syndicated real estate investor, and Monica invited me to come on her book and co-author some of that book with her. And I just believe, the capacity to once again play well in the sandbox with other influential and powerful, wonderful people who are thinking like you differently about finance and about money and about legacy. That's what gets me excited professionally and a new frontier to continue to explore.
Is there anything that I haven't touched on that you would like to mention?
You've done a great job and a very great interview. My favorite part of this whole experience is learning and meeting with people who teach me something new every time I meet with them. So financial industry is the coolest job in the world. It really is. And there's more to it than we probably have time to get into today. But I just want to say thank you, Cliff, for what you're doing and what you're bringing to your audience.
I enjoy sharing feedback from our listeners. I continue to receive warm thank yous for advocating for the benefits of creating paid internships, co-ops, and summer jobs that provide vibrant learning opportunities for our youth. It's a wonderful recruiting tool, as an internship program provides an opportunity to hire a known and mentor them into talented executives. I think we can agree the best leaders are great teachers and mentors like Mark. Please consider adding more women to participate in your paid internships. Each of us can make a positive contribution and change the lives of our young people for the better, and it personally feels great. Mark, thanks so much for being here today. Your insights into some strategies that are not so typical strategies in the financial services world are enlightening and can help all of us make better investments in the future and achieve continued success. I'll share your company's web address, lakegrowth.com, which is spelled LakeGrowth.com. Again, that's LakeGrowth.com. Mark, would you like to share your contact information with our listeners?
Yeah, thank you. If folks want to reach out, best way is to go to that website, lakegrowth.com, or you can just email me. It's my name, Mark Willis, MarkWillis at lakegrowth.com.
I want to thank you and thank our listeners. I look forward to being back shortly for another episode of the Private Equity Profits Podcast. The show has been produced by Market Domination, LLC.